Hello there, I'm Snehi Shah, and today we're at the office of L&T Finance, and with me in conversation today is the MD and CEO, Mr. Sudipta Roy. Mr. Roy, thanks so much for speaking to us today. Now, it's been 6 months since you've been at the helm of L&T Finance. Tell us how these 6 months have shaped up for you, what has remained the same in terms of strategy going ahead for the company, and what has changed.
So thank you for giving us the opportunity, and I think it's been a very action-packed last 6 months. Never been a dull day. And I think what couple of things which have happened, which we are reasonably satisfied about. The first thing is that we launched our new home loan sort of proposition, which we call the complete home loan. In this product, we have tried to reinterpret the entire home loans category with a very customer-focused, branded home loan product, which explores some of the white spaces hitherto sort of not explored by other lenders and create a niche for ourselves. And we supported it by a 360-degree marketing campaign. So I think that went very well. I think the other thing that we had promised the analyst community was that we will bring a new credit engine to the marketplace. And we are told that we will launch the beta version by the last week of June. And on 18 June, we took it live. This is what we call a three-dimensional credit engine, which does customer underwriting by bureau on one axis, account aggregator or liabilities data on another axis, and the third axis is what we call alternate data or trust signals. And these are available in quite a bit of plethora in the Indian industry right now, thanks to the flow of payments data or digitization of every lines of business. And we are very happy to note that the initial sort of results from the beta pilot in the last sort of 1 week to about 8 days has been very satisfactory.
Okay.
Our disbursement momentum has remained quite strong. If you look at our last quarter, we ended our last quarter with about 15,044 crores of disbursement, and this actually on the back of the festive quarter was more than the festive quarter. Right. So typically what happens is in the festive quarter you have a jump in disbursements, and typically the quarter after the festive quarter at times is muted. But for us, we maintained the growth momentum last quarter across the festive quarter, and we are hopeful that this quarter also we should be able to maintain similar momentum. Right. So overall, I think the team is focused on growth. The team is focused on delivery. The product reinterpretation journeys that we have taken, we started with home loans. More products will follow.
Right.
Our entire tech effort on building what we call fintech at scale and really make it fintech at scale. For example, the credit engine that we talked about.
Right.
It's completely built in-house. Close to 100 developers, data scientists, credit people, our credit policy people and credit science people actually have worked almost non-stop for 4 months to bring this to production. So overall, I think we also have staffed up all the requisite positions. We have created new positions. We created the position for our Chief AI and Data Officer.
Right.
Our new Chief AI and Data Officer, he came in from Silicon Valley. So in a way, we have created positions for regional business heads now, where we will have 4 very senior business heads managing distribution as well as the P&L in the 4 regions. Right. So in a way, the entire sort of framework building for the sort of the go forward journey ahead has got completed. We have strong disbursement momentum, and I think this 6 months has been a period of consolidation as well as a period of acceleration.
All right, Mr. Roy, let's also talk about your Lux 2026 goals. Now, you were aiming for retailization of your loan book at 95% by 2026. You're already there 2 years before time. So now would it be safe to say that the overhang, that the unwinding of the corporate book, the impact that it had on your AUM and your credit cost is now behind us?
Yeah, so it's more or less in the past.
Okay.
Yes, right. See, if you look at our overall sort of wholesale book at the end of last quarter, at the end of the quarter we had about 5,500 crores left. Right. We started with about 36,000 crores odd. Right. And then we have traversed the journey.
Yes.
And when we went into analyst call, by that time another 1,000 crores had gone out. So at the time of the analyst call around the 30th of the month of April, we were at about 4,500 crores of wholesale book. So the wholesale book is now a very small portion of our entire book. So in a way, the retailization journey is truly well under the way. We are above 94%. We were above 94% retail at the end of last quarter.
Right.
This quarter, it will move even forward. And what had happened was that because we were degrowing our wholesale book at a much faster rate than we were growing our retail book, actually, if you look at the last 4 quarters trajectory, the book actually fell for 2 quarters. Overall book at least fell for 2 quarters. Then it reached a bottom, and then it has started now going up. Hopefully, the growth will be more visible this quarter. So yes, I would agree with the statement that the paring down of the wholesale assets is more or less over.
Okay.
There's a small long tail left. That long tail will probably take another 18 to 24 months to fully go out. One thing I would like to say is that we are not in a hurry to pare off those assets, because they're standard assets, performing assets, they're generating income for the company, and only when we get a good valuation to pare off those assets, we will pare off those assets. Otherwise, we will let them amortize and run their normal
Over
course.
time.
Over time.
All right, perfect. Also, could you tell us what kind of growth CAGR are you penciling in terms of your credit growth for the next, let's say, 3 years?
See, as per our Lakshya goals, we had said 25% CAGR.
Right.
So our guidance is that we will try to hit that 25% CAGR.
Okay.
So that is what we will try to target at. See, our growth last year has been more than that. We have almost hit about close to 30% plus growth, right? And but obviously business conditions change, and sectoral product conditions change, right? So overall, our guidance is that the 25% CAGR as part of the Lakshya goals, we'll try to hit that.
All right, could you give me a percentage figure as to where wholesale and retail are as a part of your entire loan book? And like you said, 18 to 24 months you're looking at to completely spin off that book. So are you well on course to do that?
Yes, as of now, it's 94% retail and about
Right.
6% wholesale, right? So,
Okay.
So we are on course to do that.
Okay,
right?
perfect.
But as I said, the long tail of the wholesale book will take about 18 to 24 months time to sort of pare off. Right.
All right, let's now shift focus, talk about the rural segment, and L&T Finance has very significant presence in the rural segment as well. Now, if I look at some numbers, your rural group loan and microfinance loans have made up roughly 38% of your total disbursements and roughly 29% of your total book in Q4 FY24.
Yeah.
So now you have a lot of thrust coming in, you have the budget coming in, and India under Modi 3.0. What are you penciling in terms of rural demand, especially when you look at farm finance or tractor demand, especially now that even a healthy monsoon has been forecast? So what's your outlook on the rural segment?
Yeah, so the outlook on the rural segment is positive, and I'll tell you a couple of markers that we are seeing, right? First and foremost thing, if you would recall, last year the monsoon was very, very patchy, right? And that actually hit demand on the tractor business.
Right.
And our tractor business was quite sluggish last year. But if you see the current progress of the monsoons, though in the northern part of the country, the monsoons is still yet to catch up to the extent that it should have.
Right.
It is slightly delayed in northern part of the country, but the west of the country and the south of the country, it is quite satisfactory so far, and we are seeing healthy uptick in demand, at least in the southern part of the country,
Okay.
especially in tractors. So that is one marker. We sincerely hope that whatever sort of the laggardness that the southwest monsoon is showing in terms of covering the northern parts of the country, that gets done in the next 2 to 3 weeks, right? We are hoping that. And if that happens, then, I think the tractor demand will be reasonably better this year than what we have seen last year. And as you know, rains has an overall impact on rural demand, right? So if we have good monsoons, I think we are looking at a good rural demand scenario. The new government coming in, and we are expecting that the budget is around the corner,
Right.
And the budget will probably focus on the rural economy quite a lot. I think the rural economy was in quite a bit of distress post-COVID, and consumption levels actually had sort of shrunk. And one of the large markers for rural consumption as well as consumption in the semi-urban areas is two-wheeler offtake. And if you see two-wheeler demand remains sluggish till about Diwali last year, but post Diwali we saw an uptick in two-wheeler demand as well. So, and fortunately, April was actually very, very good demand for two-wheelers, right? And we did one of our highest, numbers in two-wheelers in April. So, I'm expecting the rural economy to improve, and but again, the caveat is all this is on the back of a successful monsoon, right?
Okay.
So, as of now, we are just keeping our fingers crossed.
All right, but we're also hearing some news about farm loan waivers being announced in states like you have Telangana that's come out with one. Jharkhand is in the talks to hike their farm loan waiver. And now that Maharashtra is heading into elections later this year, there's some expectation that there might be some announcement on this front. Do you think this is going to have an impact not only on your company but also the other players that are heavily into the farm finance segment? And what could be the impact when the government goes ahead or when individual state governments go ahead and announce a measure like this?
See, I think whatever has been announced is with respect to crop loans, etc.
Okay.
And pure agri-based. So if you look at our microfinance portfolio, it is more of rural business finance. So the linkages are not that much with that. And again, tractors are a secured asset at the end of the day. And frankly, that is also not 100% like-to-like links, because a lot of the tractors are also used for commercial purposes as well.
Okay.
So, this is my feeling that, those are parallel exercises and will not have much of demand, at least on the lines of business, much of impact on the lines of business that we are in.
All right, let's talk about home loans now. Home loans has been a sizable chunk of your disbursements in the year that went by. Now the Pradhan Mantri Awas Yojana, the PMAY, has been extended to 3 crore houses, more houses in urban and rural areas as well. What kind of impact are you seeing or what kind of impact are you expecting to see rather on the home loan segment?
Yeah, so see, one thing I would like to clarify is that we, L&T Finance as an organization, we are not in the affordable space.
Right.
So the PMAY doesn't exactly apply to us.
Okay.
So we normally do home loans about 25 lakhs of ticket size, or average ticket size around 70 lakhs. So we are focusing on more or less the prime or the near prime segment.
Okay.
But you are absolutely right. Our home loans disbursements have shown a satisfactory growth. Our complete home loans program, especially our branded home loan program, together with the home decor finance product that we have added as an adjunct to the entire home loan proposition, I think is getting very good response from the market. So we are very, very positive about the go forward trajectory of our home loans business, as well as, we're not only present in home loans, loan against property is also a robust business.
Right.
We have launched micro loan against property in the rural areas as well. So overall, I think we are looking at encouraging growth this year. Yes, obviously, the demand remains robust. And if you look at the inventory of home loans, inventory of finished homes or the inventory of under construction homes, they're actually at maybe about a 2 or 3 year low in many of the cities, right? So I think the end user demand is quite strong and robust. And I think overall this segment is poised for very strong growth in the next couple of years.
All right, so very strong growth is what you're penciling in for the entire home loan as well as the LAP segment.
Yes.
All right, let's talk a little bit about your financials. Now, if I take a look at what the Q4 numbers were like, you had made a sufficiently high provision and you've also provided a buffer. Now, going ahead, would you say that the company is sufficiently provisioned for against any contingencies, and can we expect your PAT momentum to improve going ahead from Q1 and all throughout FY25?
Yeah, so if you see the last quarter we took a special provision and this was primarily against some of our SR assets that we had, and we wanted to sort of create a floating provision which sort of insulated or the normal trajectory of performance from any sort of haircut impact that might have come from the SR portfolio. And that was the primary reason of doing that. We really feel that that amount which has been kept aside, about 720 crores odd, which has been kept aside, is sufficient to sort of nullify the impact of any haircut that might come from the SR portfolio, though we do not expect it, because we see a very healthy demand in revival in real estate, both commercial as well as residential, and many of the projects that are in the ARCs are actually seeing construction having started and moving forward. So we have as I have said in the analyst call, we see a pathway to resolution. But this was to give the entire investor community as well as to a great deal of comfort. Similarly, we have 980 crores of prudential provisions which have been kept aside for our micro loans portfolio. So yes, so credit costs remaining, ceteris paribus normal, and not having any impact of any unknown sort of air pockets in the business scenario. right? We expect that sequentially we should have consistent profitability going forward.
Mr. Roy, I have to ask you, Q1 FY25 earnings season is right around the corner. So give us a sense of what this quarter has shaped up for you. If you could share some numbers with us, especially what the quarter has looked like on the back of elections.
No, without going into specifics, I would say that the quarter we have been able to sort of do what we set ourselves out for the quarter, right? We took some goals at the beginning of the quarter, and typically the first quarter is very, very important for every sort of going concern. So we set ourselves some aggressive goals.
Okay.
What happened was that the beginning of the quarter, especially in the month of April and May, we had tremendous heat-related issues because it was a very torrid summer.
Yes.
For example, I'll give you an example. Some of our branches, especially as microloans branches are bare bones branches, right? Typically, many of them do not have air conditioning. It became so hot that actually we had to ship over 2,000 air coolers to all those branches.
Oh, okay.
Right? So we saw a little bit of a weakness in April, primarily because of the heat, but which again normalized between May and June.
Correct.
So we are fairly certain that though the quarter is not yet out, we are fairly certain that we will achieve whatever we set ourselves to achieve during the quarter.
All right, sir. It was great interacting with you today. Thanks so much for giving us a growth outlook and, a sense of a demand picture of what you're forecasting for your different segments going ahead, be it tractor, be it home loan, be it loan against property. So thanks so much, Mr. Roy, for taking the time out and speaking to us at 18 Now today.
Thank you so much. It's been a pleasure talking.
Thank you.